Hello and welcome to the latest in Sustainable Investors Asset Owner interview series. Our subject today is green growth. To support growth in the UK economy, the largest asset owners have agreed to increase domestic investment, largely through private market channels. At the same time, these investors are looking to address systemic risks in their portfolios, especially around climate change and nature loss. Are there tensions between these two objectives, or are they mutually reinforcing? How do asset owners identify and monitor opportunities for nature positive impact and returns? To discuss this, I'm delighted to be joined by Bruno Gardner, Head of Climate Change and Nature at Phoenix Group, one of the UK's largest asset owners. Bruno, can we start with an overview of your role and responsibilities at Phoenix?
Yeah, and firstly, thank you for having me, Chris. Really looking forward to the conversation. My job title is Head of Climate Change and Nature. That means I sit in our central sustainability team. That's a group function, and as a group function overall, we have responsibility for setting the group's overall sustainability ambition and strategy, for delivering a lot of the reporting and disclosures that we need to do, and then leading a lot of the thought leadership and advocacy where we're looking to use our position and our voice to drive wider system change, where we think we need policy regulation and markets to change in order for us to deliver on our ambition. And within that overall description of what the team does, I'm responsible for all things relating to climate change and nature, or as we tend to characterise it, sort of the planet or the environment aspects of sustainability.
Fantastic. So, obviously, Phoenix was one of a number of large UK institutions to commit to the UK government program to invest more in the UK through private channels. Um, how do you evaluate the risks and the opportunities in private markets across private markets compared to other asset classes?
Well, I mean, first and foremost, we need to deliver good customer outcomes, and that doesn't really vary whether we're talking about public markets, private markets, or any other asset classes. Um, there is some variability when we're thinking about that in the context of our policyholder book and our fiduciary duty versus our shareholder book, and but fundamentally, good customer outcomes are at the heart of all our decisions, and our focus on increasing allocations to private markets, whether that's in relation to the Mansion House Accord and our commitment that we've made there, or Sterling 20, or our own aspirations, and we've had one in the public domain for quite a while, that we have an aspiration to scale up our investment in sustainable transition and UK productive assets to 40 billion. All of that is driven by a desire ultimately to improve customer outcomes through better risk adjusted returns. And we're a relative value investor. So what that means when we're looking at private markets is we're looking, all else equal, for returns, risk adjusted returns from private markets to provide a premium to what might be available in the public or listed markets, because we need to take account of the relative lack of liquidity and a lot of sort of bespoke features and the sort of bespoke transactions that require greater assessment and greater understanding on an investment by investment basis. So when you factor all of that in, fundamentally, we would be looking for and expecting superior risk adjusted returns, which supports those better customer outcomes, which is basically at the heart of everything that we're looking to do with our investment portfolio. In parallel, investing in private markets is a great way to deliver wider benefits, whether that's in relation to our ambition to be net zero by 2050. It's possibly you could argue, the most direct lever that we have at our disposal to drive the wider transition in the real economy, which is ultimately what we want to do. Or whether that's in relation to playing our part in driving growth in the UK economy more broadly, which is what's at the heart of Sterling 20 in particular.
Mm. So in some respects, I suppose you could characterize private markets as being, there's more risk, but there's more opportunity. There's a lot of challenges to be considered. There's also a wide range of different subsectors.
Yeah.
So, bearing that in mind, where do you see the most appealing opportunities to deliver both returns and nature positive impact?
Well, when you think about private markets, the asset classes you might think about are VC and versus real assets and infrastructure. And as a fundamentally relatively large but boring institutional investor, we're particularly interested in real assets, in infrastructure type projects or infrastructure-esque projects, which deliver long-term stable returns. Um, and so that's where our greatest focus is. Not exclusively, we have exposure to VC, and we might expect that exposure to grow over time with the right opportunities. But I think the biggest opportunity for us is real assets, infrastructure, and infrastructure-like assets. Um, we when I think about sort of all of the different opportunities available to us in the context of the climate transition, um, the sorts of assets that I think are really exciting us are assets in the energy infrastructure of the UK. So when you look at what's needed to deliver the Clean Power 2030 action plan, where billions and billions of pounds, what is it? I think roughly 40 billion per year, which is a scale up from about 20 billion per year over recent years of investment is required. And in large part, that's going into upgrading and building out and modernising the transmission and the distribution networks. And these are assets which are should absolutely be in Phoenix Group's sweet spot. And so those sorts of very proven asset classes and technologies where huge investment is required would be really good examples of the sorts of assets that we're interested in. When you then look at more sort of emerging opportunities and nature, I would classify nature positive investments. I would classify as emerging opportunities. I think what we're looking for there, bearing in mind again that we are very large, but an institutional investor, and so we're not going to be taking outrageous risks. The sweet spot for us, I think, and is going to be opportunities to invest in proven asset classes where there's an opportunity to layer on revenue streams from new nature-related services, ecosystem services, and revenue streams like selling carbon credits or biodiversity net gain credits. So it's an area where we've set out a stall that over time we want to do more of this. We recognise there's a huge opportunity to invest in nature-based solutions in a way that can support good customer outcomes whilst also addressing the systemic risks of nature that we want to play our part in bringing down. And in the first instance, looking for those opportunities to invest where there is a sort of an asset class that we understand underpinning perhaps other revenue streams that we're layering on and a wider set of ecosystem services. That would be the sweet spot for us.
Okay. Within private markets, there are opportunities for direct and co-investments. Is that an area that you're looking at with a view to nature and climate positive investment strategies?
Yeah, I think both are very relevant to us. I think one of the investment vehicles that we're particularly focusing on at the moment is Future Growth Capital, which is the partnership that we established with Schroders recently. And so a lot of our focus, in particular on scaling up investment from our policyholder book, is coming through Future Growth Capital. We also are continuing to scale up the activity, the direct investment that we make from within Phoenix Group as Phoenix Group. That's largely in relation to our shareholder book. And so there's a sort of combination of direct investment as Phoenix Group, investment through Future Growth Capital. And then, of course, we have got a range of strategic asset manager partnerships. And so we'll be looking at specific opportunities with different asset managers alongside those two bigger strategic focuses.
Okay. Well, when it comes to working with those different partners, you mentioned some of the characteristics of different private markets subsectors. How do you factor in some of those traditional issues relating to liquidity risk or indeed transparency when it comes to ensuring that you get both the impact and the returns?
Um, Well, I think, as I mentioned at the start, when we're thinking about what the benefits of, but also the sort of, the other wider characteristics of private market investments that we need to be considering. The unique nature or the bespoke nature of many of the investments that we're looking at is absolutely fundamental, and so it's really important that we're conducting very thorough due diligence to fully understand these investment opportunities. And I think one of the things that we're working through, and will continue to work through for a number of years, is getting more comfortable with emerging technologies. So, whether that's in relation to the next generation of climate solutions. We've now got some very well proven climate solutions like offshore wind, onshore wind, solar. But when you're looking at the next generation of climate solutions like carbon capture, usage and storage, or hydrogen production, or nuclear for that matter, a very well proven technology, but really it's a sort of, in many ways it feels like a nascent market in the UK at the moment. Huge amounts of due diligence are required on a deal by deal basis. And over time, that's not going to change. Most of these deals are still going to be very much unique and requiring, detailed due diligence. But over time, we would expect to build our expertise in those different technology areas and so become a more efficient investor. The same is very much true of nature related investment, where we're much earlier on our journey. But I think, there is a huge job for institutional investors like Phoenix, who are ultimately going to be able to invest at real scale, to learn by doing. And so that's something that we will be looking to do. There's no sort of time frame on this, but to sort of dip our toe in the water, I think will be hugely beneficial in terms of how much we learn about that due diligence process and how we deal with some of those transparency issues, which will, I think, help over time for us to accelerate and really scale up investments in some of these areas where we've got aspirations to.
Now, private markets, quite often there's a lot of innovation. There's a lot of entrepreneurial spirit, which is part of the attraction. But it's also the case that government policy, plays a key part in the development of some of the sub technology sectors that can contribute most to addressing kind of nature and climate risks. So I'm wondering, where are the areas where you see most need for further kind of government action to support investment?
From my position as head of climate change and nature, I think there's a big need for that. So there are lots of private market investments which we're looking to make. We've got a strong track record of making in proven asset classes. Like, just to pick a good example where we've done quite a lot, social housing, where ultimately we're looking for opportunities. There's a pipeline of opportunities coming our way, and we are able to invest in the current regulatory and policy environment relatively straightforwardly. In relation to my role of climate change and nature, that's not so much the case. There are opportunities to invest within the current policy and regulatory landscape, but overall, we're seeing far fewer investable opportunities come down the pipeline than we would like to be the case. And so a lot of the work that my team and Phoenix Group more broadly has done over the last 2 or 3 years has on thought leadership and advocacy has focused on really understanding some of those challenges and working collaboratively with government, with the regulator, to look for solutions that will overcome those challenges. And fundamentally, a lot of it comes down to not seeing risk-adjusted returns which stack up for us. In the context of more nascent climate solutions, in the context of a lot of the nature-based investment opportunities that we're seeing starting to emerge, that comes down to less certain revenue streams than we would need. And so therefore a lot of the focus of our policy and regulatory advocacy and the thought leadership that we're delivering has been on how can we develop, or how can the government and the regulator develop policies that help to de-risk investments, whether that's through blended finance or insurance or guarantees. There are lots of different ways to do this. But that's been a huge focus, and that's probably the single biggest challenge at the moment in relation to some of those newer areas that we really want to scale up investment.
I guess in the context of investors always preferring as much certainty as is possible, that certainly in the UK context, then I guess uncertainty around initiatives such as biodiversity net gain might be one of the challenges in this area.
Yeah, absolutely. And you can never have complete certainty. We're not naive, but I think one of the concerns that we have as long-term investors at the moment is a greater feeling of uncertainty in relation to certain things. Biodiversity net gain is a good example. There are other things which have been in the political discourse and in mainstream media recently, like contracts for difference in relation to offshore wind in particular, where all of a sudden there are statements being made which suggest that there is less certainty there than we would have been assuming for the last decade or however long. And so, yeah, it's almost sort of irrelevant the context that we're talking about, but those sorts of policies that have been developed and are in place, and policies that are in the pipeline and being discussed and we might expect to be implemented in due course, are absolutely crucial to our ability as a long-term institutional investor to allocate, in the first instance, time and resource to building capability to invest, but even more so when it comes to actually putting our money where our mouth is. Confidence in those sorts of policies is absolutely crucial.
So you mentioned that there's a certain amount of advocacy activity that takes a good amount of resource, as does the oversight you require of your when you're working with managers in the private markets and beyond. Um, so I'm wondering what your experience has been in terms of how you've been building up Phoenix's in-house expertise, processes, resources in order to ensure that you have the overall wherewithal to make the investment decisions and to achieve the objectives that you're looking to achieve.
Yeah, and you're spot on in how you sort of teed up the question. I think internally, we are still on a journey where we are continuing to build up expertise in different areas, different asset classes, different technologies, and that will continue. We've historically, if you look back, Phoenix did very little direct investment itself, and we're now in a position where we're doing much more of that. And one of the things that we've been doing over the last 12 or so months, which is it's quite a big shift, but I think a very positive shift, is really embedding a lot of the sustainable investment expertise in the core investing teams. And so that's I think a direction of travel that lots of investors are going in. But if you rewind 12 or 18 months at Phoenix, we had, as well as the team that I'm part of, we had a sort of a big centre of excellence within our asset management team where all of our sustainable investing expertise was housed. And we've restructured, we've reorganised since then. And so now we've got a lot of the experts that were in that central team sitting with frontline investment teams, with sort of traditional investment teams, if you like, and therefore in a position to make much more integrated decisions in relation to whether, when, and how we're investing in sustainable asset classes and making direct investments in those. So that's a big focus for us, and I think has been a really important evolution.
Okay. In the public markets, we know that collaboration has been a bigger part of how asset owners manage their investments and their oversight. But is that also the case when it comes to kind of private markets investments? Are there different forms of collaboration in order to ensure that you have the resources and the information in order to act effectively.
Absolutely, yeah. I think the collaboration in relation to private markets will take different forms than the collaboration that we've seen on public markets. But you know, a good example of that in practice is Future Growth Capital, the joint venture with Schroders. One of the drivers behind that was a recognition that in order to invest in private markets, you generally need a certain scale and expertise in order to do that effectively because of a lot of the things that we've talked about previously. You know, basically higher transaction costs, greater need for deal specific due diligence and so on, and that's hard to do if you're subscale. So one of the reasons that we developed Future Growth Capital was both to enable Phoenix Group to do what we want to do in terms of scaling up investment in private markets, but also to provide a vehicle for other um, perhaps smaller pension funds who want to do something similar to get behind and to enable them to make those investments too. So I think that's probably the single biggest uh, sort of direct and very straightforward benefit from collaboration is enabling smaller players to benefit from that expertise and scale that would otherwise preclude them from investing in private markets.
And I mean, we are in a period where consolidation is a very important trend, indeed in the UK, but beyond as well. And to what extent do you feel that? I mean, how do you view the tensions in that process when it comes to enabling more effective investment, not purely in private markets, but beyond?
Mm. I mean, we are generally pro consolidation at Phoenix. You know, when you look to the markets, the pension markets that we consider to be the exemplars that are operating effectively and efficiently and delivering strong long-term customer outcomes, they tend to be markets which have seen that consolidation. A lot of the issues that we've identified in relation to how the UK market operates more broadly than the conversation we're having now do tend to also lead back to consolidation as one of the solutions. You know, clearly it's not a silver bullet, and there's lots of other things that need to happen alongside consolidation. But we do think that consolidation would overcome a lot of the challenges that we see as a UK market as a whole.
And when it comes to looking forward to 2026, are there particular areas where you see most opportunity within the private market space for research into opportunities that will deliver nature a positive impact? Areas that are perhaps not ready yet, but you can see yourself digging into next year with a view to out to 2030.
Uh, Yeah, so we've got some really interesting thought leadership planned for next year. Some of that focuses specifically on nature and what needs to happen to unlock investment in nature. And then there's also a lot of thought leadership that will focus on a sort of continuing theme for us, which is unlocking investment in climate solutions and the net zero transition. So I'll maybe talk about that as well, but I'll start with the nature stuff. So if I take a step back and think about the journey that Phoenix Group has been on, we've been focusing on nature in earnest for I don't know, probably about 3 years now, really focusing in earnest. And that began with a TNFD pilot, a pilot of their LEAP um, process for understanding the impacts, dependencies, risks, and opportunities that we're exposed to through our investment portfolio. And that provided a really solid foundation for better understanding our portfolio. And we've continued to build on that. Um, More recently, we honed in on deforestation, land use change, and freshwater scarcity as being two themes that we want to sort of take forward as our priority themes. And so over the coming years, we're going to be steadily building up the actions that we're taking in relation to those. And the initial actions have tended to focus on mitigating risk. And so factoring in deforestation and freshwater scarcity into our investment stewardship engagement, for example. But what we increasingly want to do now is to really look for those opportunities, those investment opportunities, which we've always talked about as being the other side of the coin in terms of nature. And so I think that will be a big focus for next year. In particular, we're conscious that we already know that a lot of the areas we expect ultimately to develop into well-functioning markets with investable opportunities aren't there yet. And they tend to suffer, broadly speaking, from the same challenges that a lot of more nascent climate solutions have suffered from, and in cases are still suffering from to date. So one of our big plans for next year is to deliver some thought leadership, which will be very sort of collaborative and engagement centric, to identify what some of those key barriers are, and identify the areas where we as Phoenix Group have got an opportunity to lean in using our scale and voice to try and drive change in the way that we've been doing in relation to climate solutions. And in parallel with that, all of that work we've been doing that's focused on climate solutions and the net zero transition, that is by no means done. We're seeing more and more potential to invest, but we continue to see barriers. And so some of those barriers are at a national level, in relation to the Clean Power 2030 Action Plan. We're doing some really interesting work at the moment to better understand whether and how institutional investors can play a greater role alongside banks and other investors to more rapidly scale up the investment we need to see there. And also on a regional level, a lot of the investment that we think will ultimately be made in the net zero transition will happen on a regional level, and it will be driven by local and in particular larger combined mayoral authorities. And at the moment, there are barriers that are preventing those authorities from developing pipelines of investable projects as effectively and efficiently as they and we would like. And so that will continue to be a focus for us as well.
A busy agenda for the next couple of years, it seems.
It's
Bruno,
a really exciting time. Thank you. No, as I say, it's a really exciting time. I think there's loads that needs to be done. There's been loads of progress over the last few years. Loads more needs to be done. But I think the fact that we are seeing things move in the right direction, in spite of the political headwinds in the UK and internationally, and all of the other challenges that we're facing, I think we have made great progress and we can see a clear route forward. So I'm really looking forward to staying the course and getting stuck into some of those challenges.
Long may it continue. Thanks very much, Bruno.